Picture this. You're chilling on the beach in 2023, sipping a piña colada, feeling pretty good about life when suddenly your phone blows up. A major crypto influencer just dropped a bomb. Bitcoin is about to explode to 1 million by 2025 or maybe 4.5 million by 2035. Meanwhile, others are screaming that Bitcoin and most altcoins are destined for zero. So which one is right? Well, welcome back to Crypto Cortex, where we cut through the noise and bring you clarity in the chaos. Today, we're diving into the ultimate guide to crypto price prediction. We'll cover everything from insane price targets for Bitcoin, Ethereum, and other top cryptos to how to spot accurate price predictions so you can avoid getting burned. Let's jump right in. Crypto price prediction frenzy. Separate hype from reality. Look, let's be real. Predictions drive this market. Whether it's on X, Twitter, Telegram, or YouTube, everyone has a price target. Some say Bitcoin to 1 million by 2025. Others scream $0. Who do you trust? The truth is, predictions are not guarantees. They're educated estimates based on data, history, and market psychology. To separate hype from reality, you need to understand how predictions are made and what drives them. First off, let's talk about what influences price action. When experts forecast prices, here's what they're looking at. Market sentiment. Hype or fear drives short-term moves. Adoption. The more people and institutions use a token, the higher the demand. Roadmaps and upgrades, Ethereum's merge, Bitcoin's halving, Solana's scaling, these matter. Tokenomics, supply caps, burns, halvings, and vesting schedules. Macro factors, inflation, interest rates, regulations, and global events. Sometimes it's rational, sometimes it's pure speculation. That's why price predictions should be viewed as probabilities, not promises. Now let's dive into some actual predictions for 2025 and beyond. Remember, these are not financial advice, just food for thought. 2025. Forecast, the near future. All right, let's get specific. Long-term forecast, 2026. 2035. Now here's where it gets wild. If adoption keeps accelerating, here's what analysts see by 2035. Bitcoin, potentially $4.5 million per coin. That's not hype. It's based on limited supply and trillions in institutional inflows. How are predictions made? Technical versus fundamental analysis. Now, how do experts arrive at these numbers? There are two main methods. 1. Technical analysis, TA. Looking at charts, support and resistance, trend lines, indicators like RSI and MACD. TA is best for short-term predictions. 2. Fundamental analysis, FA. Evaluating adoption, tokenomics, partnerships, developer activity, regulations, and macro trends. FA is more reliable for long-term forecasts. Most analysts use a blend of both. TA shows short-term market behavior. FA tells you whether a coin has staying power. What affects crypto prices the most? Let's break down some of the biggest drivers. Halvings. Bitcoin's supply shock events that historically trigger bull runs. Next halving is due in 2028. Token burns, supply reduction mechanics, popular with meme coins. Vesting unlocks. Big supply unlocks can crash prices. Governance votes. Protocol decisions affect demand. Speculation events. ETFs. SEC lawsuits. Exchange collapses. Buy the rumor. Sell the news is real. Unforeseen news. Black swan events like 2023. SEC lawsuits against Binance and Coinbase can erase billions overnight. In short, prices aren't just math, they're psychology, plus economics, plus surprise. Can you trust price predictions? Here's the tough truth. Not all predictions are equal. Ask yourself 3 things. Bias. Does the predictor have skin in the game? Knowledge. Do they understand fundamentals and market cycles? Evidence. Are they showing data, charts, and reasoning? On social media, 90% of predictions are hype-driven. Trust but verify. And always remember, never invest more than you can afford to lose. Tools for making your own predictions. Don't be a sheep following random influencers. Make your own forecasts. Here are the best resources. 1. TradingView for charts and TA. 2. CoinMarketCap for community insights and token data. 3. Glassnode and Into the Block for on-chain analysis. 4. DappRadar to track DeFi and NFT activity. 5. Twitter and Telegram to gauge sentiment but filter the noise. 6. Crypto news sites like Crypto News for the latest updates and context. Blend these tools and you'll see trends before they hit the mainstream. The future of crypto. Big picture. Now let's zoom out for perspective. By 2035, crypto won't be niche anymore. It will be part of global finance. Bitcoin will likely be a global reserve asset. Ethereum could power the tokenized economy. Real-world assets, stocks, real estate, bonds will live on blockchains. Meme coins? Some will vanish. Some might evolve with utility. The future is massive, but volatility isn't going away. The key is positioning for the long term and not getting shaken out by short-term swings. We've covered a lot today, but remember, predicting price action isn't about being right every time. It's about understanding the forces that drive this market and arming yourself with the tools to make smarter decisions. Stay curious, keep learning, and stay ahead of the curve, because in this market, knowledge isn't just power, it's profit. Until next time, trade smart, trade safe, and trade with the knowledge that you're part of something big. Thanks for watching.